Good morning, everybody. Good afternoon, good evening, wherever you are on the planet. It's Saturday. And boy, did I uncover a lot of stuff today about Bitcoin. Really, really interesting stuff. I know it's hard to believe because it's a Saturday. What can be going on a Saturday? Well, I'm going to break down what happened during the first 20 weeks of the ETFs, what happened over the last nine days. We're going to look at adoption. We're going to look at tons of charts, really interesting ones. How long will this bull market last? Where are we now? Where do we stand? How does it match up against history? We'll look at the ETFs in detail because, boy, the last 9 days
during the
were
first
incredible.
20 weeks of the ETFs.
Sorry, that was making sure my sound is working in the back. Yearly candles. We'll look at some other stuff like hashrate, Bitcoin transaction fees, some macro charts, and a bunch more. So let's go. Thank you all for being here. I think I'm ready to go. There you go. I'm juggling everything around. Today, I'm going to start with the charts because there's too many. And you guys like the charts. First of all, this is super interesting. I'm going to start with charts, but a bit of Bitcoin history charts. This is from Rizzo, the Bitcoin historian. Thank you, Pete, for your great work. This is the oldest Bitcoin chart ever. 14 years ago, 1,000 Bitcoin traded for $3. That's 3 cents a Bitcoin. The mind boggles. Imagine having that bag. Wow, crazy. But there are others building big bags right now as we speak. This is crazy. Week 20 is in the bag. Okay? The ETFs bought 15,421 Bitcoin. The number of Bitcoin mined in that same period is 3,115. Shout out to HODL 15 Capital. That is nearly 5 times the daily issuance being snagged by these ETFs. Crazy. Dr. Sauce, thank you for coming too. Now, as you know, I always crunch numbers. I found some interesting statistics and a whole bunch more as well for these ETFs, who many think is bad or it's a nothing burger or whatever else. I'll prove to you, no, the ETFs are definitely very substantial. So first of all, over the last 9 days, these 9 new ETFs bought $2 billion worth of Bitcoin. Okay, that's 30,174 Bitcoin, 7 times the daily issuance of 450 a day. And the price, okay, over that period went from 60,792 to $69,021. By the way, that $69,021 was measured as of now it's 69,100. It's gone up a little bit. Hey, Haxel, thank you for coming. So that is crazy. That is a 13.54% gain in 9 days. And people are still not happy. When moon, when 100,000, when whatever. Anyway, let's break down the last 20 weeks of these ETFs. Super fun chart. Here, you will see what happened. All right, we had the Bitcoin halving kick in week 15. Right before week 15 was week 14. People stole the bull. They stopped buying. And then they waited for 3 or 4 weeks to see if the protocol would actually work after the halving. And then they put their toe back in the water in week 18. And after that, bonkers. Now, nothing like week 6, the biggest week ever. And 8, 9, and 10 were very solid too. Massive dumpage week 3 from Grayscale. Massive dumpage week 11 from Grayscale as well. Bit of a dump from week 17 from Grayscale. But what does this all mean? Let's have another look. Bitcoin just went up $50 because of the mojo here. Thank you, Nick, for coming. Now, over the last 20 weeks of these ETFs, Bitcoin price, the Bitcoin price, first of all, it went up 61% in 20 weeks. And again, people want more. There must be, I think the Bitcoin community must be people who don't know traditional markets. But if you make 61% in 20 weeks, you're doing pretty darn well. And that's after a 4x off the bottom. Anyway, let's break down the statistics so far. Super Soul Man, thank you for coming. This is the Bitcoin ETF. And Sean Donnelly, thank you for being here too, buddy. Bitcoin ETF stats 20 weeks in. Okay, we had 14 positive weeks. We had 6 negative weeks. I can pretty much guarantee you, if it wasn't for Grayscale, there'd be no negative weeks. highly unlikely. And again, the nervousness around the halving, we can understand that. But it gets better. The average amount of Bitcoin bought per week, 12,266 Bitcoin. Monster inflow. Largest inflow, 44,376 Bitcoin bought in week 6. And week 11, the largest outflow, 13,495. So if you look at the best week versus the worst week, the best week is more than 3.5 times better than the worst week. So the tide is turning. Now, let's zoom out and look at where we are this time around, because I always say this time is different. This time we're higher, we're earlier, etc. This will prove just that. And a shout out as well to Bitcoin charts. Full crypto nerd and a bottle red. Thank you for coming. And bottle red, thank you for all you do, by the way, on Twitter. I see everything. First of all, let's go back and look at previous cycles. This begins in 2011. And of course, the red is the bear market. So focus your eyes on first of all, the year after the red and the second year after the red. As I have always said, we are halfway through this bull market, everybody. For the people that just joined, remember, we're halfway through. All right, I want that to be very clear. A lot of people, Jeff Hammer, thank you for coming. I want people to be clear. Imagine a party starts at 9 p.m. and it finishes at 12:30, 1 o'clock in the morning. It's already after 11. Some people are already trickling out the door. Some people are already getting hammered. Okay, this is where we are in the Bitcoin party. So just for perspective, it's always important to know where you are. Now, 2023, the returns were stronger than the post-bear year of 2015 and 2019. We went up faster and earlier than before. All right. If you look at the second year afterwards, 2016, the gains were 124%. And the second year after the 2018 bear, the gains are 304%. So far, we are 21 weeks into 2024, and the gains are already 63%. Not bad. Not bad at all. And this time is different. The asset is harder. There's more money coming in. There's more knowledge. There's more lost coins. So I think it'll be very exciting. Now, another piece of perspective. The correction is over. We had that dip sub 60K. This from Rect Capital. And it's very similar to the 2016 fractal. You're going to hear that a lot. Remember, 2019 had a little mini financial crisis and 2020 had C19. So cast that away. It did have a lot of money printing too, which is happening in a stealthy manner. But when we look at 2016, we did have that dip for 23 bars. I made a video a few weeks ago that 23 bars typically was the time for us to get through the post-halving recovery. And it actually happened sooner than that. Again, there's more knowledge, there's more money, things are happening faster, way faster than before. So we are going up from here, all right? The money has come back, and we've seen the impact of these ETFs, 61% in 20 weeks. And I proved in a video Wednesday or Thursday that 85% of the price action for Bitcoin is driven by the ETF money flow. That's why I'm obsessed with the ETFs, because I like to know where the price is going to go, okay? Gen Xer, thank you for coming. And congratulations to being a Gen Xer. And here, now, there's a tiny little bit of again, remember I spoke about the party, and it's after 11 p.m., shuts down at 12:30, 1 o'clock in the morning. Well, this is from TechDev, and he said that the Bitcoin high has always printed its macro high 12 months from this point in the 3.5-year global liquidity cycle, i.e., we could end the party a little bit early, like January 2025. I actually had a long 1.5-hour interview with Raoul Pal yesterday, and we spoke about this too. That video will be coming out next week on Real Vision and then probably on YouTube afterwards. But this is so important. Liquidity drives a lot of action. We also know China are printing like crazy, and other markets around the world are going to do that. I think the liquidity cycle may last a little longer than TechDev expects, so hang tight, but good times ahead. Another quick chart too. Justice for All, Team Metallica's in the house. This is Bitcoin transaction fees, and they just hit their lowest level since November 2023. In fact, the beginning of November 2023. So was that 7 months ago? So the average Bitcoin fee now is about $2.70, which is very cheap. And that will impact the miners. They did have that 5 days of runes, which thought they were going to survive the halving. But no, some miners that are not effective and efficient will get hit and hammered pretty soon. Another view of the Bitcoin world is the hash rate. This is from the Tabby model, and it's the hash rate year to date. You can see here, hash rate has been pretty stable. Like it had a big run up early part of the year, but since then it's just banging up against all-time highs. So KT, thank you as well for coming. This is critical here. The hash rate is banging up against new all-time highs. We had three weeks in a row or 3 days in a row where it's just there, and it will break a new all-time high. And this is surprising because normally after the halving, people unplug their rigs. But because the price has been higher than normal, they haven't done that yet. They're struggling, holding on, but there'll come a time where they will not be able to hold on much longer, especially if this hash rate spikes, and it looks like it's going to as well over the next 3 to 5 days. Now let's look at some Bitcoin age bands. Yet another chart. This is a very important one. Bitcoin last active over the last 3+ years continues to increase. Cast your eye on the green line there. And I blew up the little chart too. 46.4% of all Bitcoin has not moved in 3 years. Soon that will be half. 2 years plus is 55%, and 1 year plus is 66%. Again, it continues to increase. People continue to lose their coins, lose their keys, send Bitcoin to the wrong addresses, make a mistake, etc. They think they have their seed in their head, and they forget that too. I've seen every scenario. But the question is, what will happen next? It'll be exciting, that's for sure, because this is harder than ever before. And another cool chart too from Charts BTC once again. This is the price of $1 today. It is 1,449 satoshis. Remember, when we go to 100 sat per dollar, you know what that means? Price of Bitcoin's $1 million, and that's an inevitability. Okay? But remember as well, $1 million is not the $1 million I used to know as a kid growing up. That was a lot of money back then, but nowadays, not as much anymore because of debasement. And one other cool chart as well. Shout out to Raul Paul. This is from Global Macro Investor. Per their chart of crypto adoption, it is faster than the web. The total crypto users is millions per Real Vision. Right now is approximately, call it 700 million. I don't think it's that high, but they believe we'll hit 1 billion crypto users in 2025 and 4 billion crypto users in the year 2030, which is half the planet. But the most important macro thing to look at here is crypto adoption is happening faster than internet adoption, which is super important for us because of Metcalfe's law. The more people that use it, the more value the network has. It's very simple, very straightforward. And proving this as well, this actually blew me away. Phantom, which is a crypto wallet that is also Bitcoin capable. By the way, Cash App is also Bitcoin capable, and PayPal is also Bitcoin capable. But for that to now be the top free finance app right now, kind of stunning. This illustrates crypto adoption is happening very fast when the traditional finance apps are now tertiary. And one other cool chart to Asia. I get a lot of questions. What's happening with Asia? Well, I didn't report into too much because it's a bit of a nothing burger. But before we get into the Hong Kong ETFs, you can see here, despite China's ban on crypto trading in 2021, Chinese demand still plays a significant role in the crypto market, with an estimated 86 billion flowing into the country from June 2022 to a few months ago. Through June 2023, the only stats we have. South Korea still number one, 112 billion. Japan, 103 billion. China, 86.4 billion. Taiwan, 71 billion. And Hong Kong, 64 billion. But when you add up Hong Kong and China together, they are the leaders, okay? Now, let's talk about the Hong Kong ETFs. Again, chart from HODL 15. You can see here that the Hong Kong ETFs have actually not done much. They've either been flat or down over the last 3 weeks since they launched. So, Joe Thurahan, thank you for coming. So it hasn't been as exciting, but there are talks that one of these ETFs is going to have access to mainland China real soon. We also know mainland China is printing money like there's no tomorrow. We also know the Chinese are buying gold like there's no tomorrow. We also know the Chinese are pulling their fiat from their banks or their digital yuan or whatever else like there's no tomorrow. It's only a matter of time before these things pop. But in the meantime, over the last 3 weeks, it's been a nothing burger. I took this picture myself, by the way. I thought it was cute. So anyway, and in the final chart of the day, yes, before we get into some numbers and news, this is a survey from the Cato Institute, and it asked people, twice as many Americans oppose as support a central bank digital currency, but most don't know enough yet to say. So half of the US doesn't know what a CBDC is, 16% support it, and 34% oppose it. And as I say, ignorance is not bliss, ignorance is dangerous. And it was a great week because the government had a vote to prevent spying on American citizens, which means nixing that feature within the central bank digital currency. There will be some form of a digital currency coming, but at least the spying element will be quashed. Bitcoin is up $150 since I started. Well done. Let's talk about some quick news, and then we get into some other cool charts. Memorial Day pickle inflation, not information. And I didn't even know it was a holiday weekend until I saw this. So since last Memorial Day, burgers are up 14.63%. And for those of you who aren't in the US, I think it's a big grilling time. People barbecue outside and they cook a lot of stuff that's probably not that good for you. But anyway, the point is, burgers are up 14.63%. But pickles are in a bit of a pickle. Pickle relish is up 50% over a year ago. And Bitcoin is up 150% since Memorial Day weekend last year. 27.7K, now it's 69K. 69,250 as we speak. So there is inflation and there's risk assets that go up faster than inflation. The simple message here is be in those assets. Yes, they are volatile, but you need them or else you will not be able to get out of a pickle or afford pickles, as they say. And from Strike, shout out to Jack Mollers, legend in the space. He now has enabled instant bank withdrawals within the Strike app. And US customers can now transfer their funds from Strike to their bank account instantaneously, 24/7, 365 a year. No friction. Okay, pay your bills, whatever you need to do. You can hold your money in Bitcoin, but when you need it in a pinch, you can pull it instantaneously. No more banking hours. This is a really cool feature. And this is a piece that was flying around the internet from a guy called Ross Clark, who I've personally never heard of, nor the Spectator magazine. But now we have the people, I call them psyops, they're getting very desperate. Bitcoin is a threat to us all. Crypto has entered the world of retail investing. Therefore, it's now a threat. Now, it stuns me, the type of stuff that mainstream media comes out with. But this guy's got quite special. And he got lit up on Twitter as well. First of all, who is Ross Clark? I didn't know. But he's got no journalistic integrity, apparently. Poor journalism. Something you clearly don't understand. Should be fired. Blah, blah, blah. A twit. An idiot. I mean, it's amazing that rags will publish this type of stuff. And anybody who knows anything, but again, maybe that rag services this 49% who are blissfully ignorant and they believe that stuff. But it's sad for them because they get left out. They're not on the train and they will suffer as a result. That is sure. All right, time for the Bitcoin playlist will be here if I remember to put it up, which I probably won't because I'm alone on Saturdays. Nobody here at the office. Bitcoin black hole. Let's go. First of all, day 94. Hard to believe. We have to have a celebration for day 100. Ideas welcome. Drop a comment below. So we had $2 billion in 9 days. big flows, green across the board. It was an excellent week and change. This is what the macro thing looks like. BlackRock was back big. Fidelity also very steady Eddie, snagging a lot of stuff. And HODL, that little pink line, you can hardly see it, but they started stacking hard really for the first time since this all began. So I bet you, next time we look at the 13F filings for Q2, by the way, which will end in 35 days, I bet you HODL 15 is aligned with some pension fund somewhere and they're buying spot ETF. See if I'm right. I won't forget. Anyway, total money flow, 10 solid days up. And here you can see the 9 days, the big blue lines. I want you to look at the bottom right-hand corner. And again, the red line is the aggregate amount in the cumulative amount in these ETFs. It keeps going up and to the right. And I can't stress enough here how much is being stacked. This one has hit equilibrium. Sun and Shine is gone. The new management team will put together a low fee, so don't expect that drain to continue. So other ETFs that want to fill their bags have to go buy. They have to empty out the OTC desks. They have to knock on the door of miners and beg for them. And they have to beg old wallets. Can you give us some of that Bitcoin? We really need it badly. This is also stunning. Just yesterday alone, Musicians Live, thank you for coming up there in Canada. Yesterday, 3,675 Bitcoin were pulled from the system. That is approximately, in my little brain, 8.2x the daily issuance. It's only a matter of time before we run out. Unless, of course, long-term holders start selling hard. Thank you all for coming. Happy Saturday, everybody. I'll be back in 2 hours. I've got a week recap, and it's a really good one. Some stuff I know you didn't hear about. So I'll be back in about 2 hours, just putting the finishing touches on this. And then hopefully I'll see some of you later. Thanks all for coming. Thank you, Sean Donnelly. And again, Jeff Hammer and John Ireland Tilestone and everybody else. See you all in a short while. Take care. Bye.